Hey, welcome back. Today we're talking about taxes and net pay. In the past, we looked at where your income was coming from and how you got paid, whether it was salaried or piece rate or hourly. Now we want to, and we looked at gross income, total money coming in. Now we want to look at your net income. How much do you have left after taxes and other deductions? So today we're going to look at the 1040 form and how you pay your taxes and get a better sense for why you pay your taxes and how that tax system works. The first thing we need to recognize is that, just like we saw in the last class, our gross pay is different from our take-home pay or our net pay. We might earn $3,000 in pay and salary, but because of various deductions, we don't get to keep all $3,000. In this example, we only get to keep $1,834. We're losing nearly more than a third, really, of our salary to various deductions, some of which are mandatory and some of which are voluntary. In this example, mandatory deductions are ones that have to be taken out that I have no choice in, and those would be things like federal income tax, state income tax, Social Security, and Medicare. Those are things that I am required by law to pay. Other items are voluntary. I don't have to pay them, but I may choose to have them taken out of my paycheck. Things like my insurance premium. I don't have to have insurance through my company. I could get private insurance in some other way, but I choose to have my health insurance with my company, and if I do that, I have to pay a premium. Same with retirement. I don't have to fund my retirement plan, but if I choose to do that, then I have to take that money out of my paycheck. Charity, flex plan spending, these are all options for me, but they all take away from my gross pay and leave me with less take-home pay at the end of the day. When it comes to mandatory deductions, income tax is one of the biggest ones. So when we file our taxes, we are filing with the organization called the Internal Revenue Service, or IRS, and they collect all of the federal taxes in this country. And all of those people in this country who earn income must file a tax return, and they must be filed no later than April 15th every single year. And that tax return, its purpose is to help determine whether or not we've already paid enough in tax throughout the course of the year or not, because our employers typically are holding some of our pay and paying our taxes on our behalf in advance, and we need to make sure every year that we've paid enough based on how much we've earned. There are a few key tax forms you need to be familiar with and that we will use in order to be able to pay our taxes from year to year. The first form is what we call a W-4. This is something you'll complete during your onboarding period. When you begin your employment with a company, they will ask you to fill out a W-4. The purpose of it is to help them determine how much money to withhold from your income, from your paycheck, in order to pay your taxes. And some people will want to hold more, and some people will want them to withhold less. And sort of a personal preference depends on whether you're married and how much money you expect to make, and a lot of different things that go into it. And there's a worksheet that you would complete as part of that W-4 to help you determine how much your employer should withhold from your paycheck in order to pay taxes. If it turns out you don't withhold enough, or you're withholding more than you want, you can always change it at any time. You just fill out a new W-4 and turn it into Human Resources, and they adjust your paycheck. The W-4 looks like this. It's very simple. It's a worksheet. You follow the instructions, and there's a lot more instructions on the full sheet that you would follow to figure out how much they need to withhold. And again, you'd sign this and hand it in to your Human Resources representative when you begin your employment. Another form you'll need is what's called a W-2 form. This W-2 form is sent to you every January from your employer, and it shows how much money you've earned in salaries, wages, and tips. And it also shows how much you've already paid in taxes, how much of your income was withheld. And so you'll use the information, your employer will use the information from the W-4 to withhold money throughout the course of the year. They report how much they've withheld on your W-2, and you'll use that information to fill out your tax form. And the W-2 is the same from everybody. It's a uniform form that's sent to people, and so the information may be different, but the look is the same. You'll find your employer's name on the form. You'll find your name on the form. And it will list how much money you've paid in wages, tips, and compensation, and it'll show how much money has been withheld for federal income tax, how much money was taken out for Social Security, and how much was taken out for Medicare. You might also need what's called a 1099 form. The Form 1099 reports any sort of interest in dividend income you may have earned. And so the 1099 INT shows interest income from banks, for example, and the 1099 DIV shows any dividends you might have earned from stocks and mutual funds. And again, the form is the same for everybody, just the information will be different. In this case, again, you'll see the bank was paying interest, and it was paying $43 in interest in the course of the previous year. Another form you'll need is the 1040 form. This is the tax return form. This is very important. This is the one that you'll submit to the IRS that will have all the information for you to show whether you've paid enough in taxes or not. And so you'll get this every year from the library or from a tax preparer, or sometimes you might use TurboTax, in which case you'll never see this form at all, which is probably a good thing. And under current law, everyone fills out the same form. In years past, they used to have a form called the EZ. It was a much more simplified form, but today, everyone fills out the same tax form. And this is what it might look like for you. Again, the tax form is a worksheet, so you look at each of the fields, fill in the relevant information, and if it doesn't apply to you, you leave it alone. So if you're filling it out as a single person, you would click on single or check single and fill out your name and information, Social Security information, and ignore the rest. If you happen to have a spouse, you'd put their name on here. If you had kids, you'd list their names. So if it's not relevant to you, you leave it alone. There is also this option here for the presidential election campaign. You can choose to give $3, I think it is, of your tax return if you get a tax refund to pay for the presidential election, and you can choose to check that off if you want to give them your money, and if you don't want to give them your money, you just leave it blank. Eventually, when you're done, you'll have to go ahead and sign this to make it an official form. The second page has got all the information, and again, it's a worksheet, so you just look at what they're asking for and fill in the information, and we'll talk through how to do that in just a second. For someone who's young and doesn't have a lot of money tied up in investments or doesn't have kids, filling out your tax form is actually going to be pretty simple. So what you'd want to do is get your W-2 and have that in hand as you also have your 1040 and start working line by line. That first line is asking for how much you earned in wages and tips, and it says attach the W-2, and that's also where you're going to find the information. In this case, we've got $45,000 in income according to the W-2, and we would put that number right in line 1, 45,000. Now, a lot of this other stuff doesn't really apply to us. We don't have tax-exempt interest or qualified dividends or IRAs or pensions or Social Security benefits, at least not in this very simple example. We might have taxable interest potentially, and if we did, we'd have a 1099, and we'd put that information right here in line 2B. If we don't have anything, we just go ahead and leave it blank. And we see that line 6 says add up all your forms of income. So we can go ahead and do that. It's $45,000 in income and then nothing else. So we would put the $45,000 down in line 6. So then it's going to ask you for your adjusted gross income. We don't have any adjustments, so it's still $45,000. And then we are offered the opportunity for a standard deduction or itemized deductions. And if we mean to do a standard or itemized deduction, what that means, to have a deduction, means that the government is going to remove some of our income and pretend like we didn't earn it. They're not going to tax us on a certain amount. If I itemize it, it means I've got lots of charitable contributions and other things, and it makes me able to remove even more of my income from taxes. If I don't give to charity or don't have much in the way of deductions on my own, the government still lets me take, as a single person, $12,000 out of my income that they won't tax. Now, they do this, of course, because there's a lot of things the government wants us as a people to do, and we'll talk more about deductions in a moment, but really it's things like health care. They want you to be healthy, so if you spend money on health care, you get to take some of that money off of your taxes. Or investing for retirement, they want you to do that, so they'll let you take some of this off in your taxes if you have a standard IRA. They want you to go to college, so they'll let you take some of your college expenses and not count them. They want us to give to charity and to help support causes. And so, again, anytime I give a charitable contribution, that money won't be taxed. All of those are what we call a deduction. When I take the deductions from my income, I have my taxable income, which in this case is $33,000. And really, I sort of made a mistake here. This $33,000 should be in line 10. But the point is, we're not going to be taxed on all of the money that we've earned. Like I said, those deductions are allowed, and we can either itemize them by listing every single one, or if we don't have $12,000 worth of deductions as a single person, we get to take $12,000 off our income. And it's things for like mortgage. When you pay interest on your mortgage, they want you to own a house, and so the government lets you take some of that off of your tax bill. Education expenses, healthcare, charitable contributions are all things the government wants you to do, and they incentivize you to take certain behaviors by allowing you to not pay tax on some of your income. Now, there's an example here. If you had $10,000, if you earn $10,000, you pay a 10% tax rate. If you had $2,000 in deductions, what that means is, without deductions, you'd be paying $1,000 in income tax, 10,000 times the income tax rate of 10%. But with deductions, instead of having $10,000 worth of income, the government assumes you have $8,000 worth of income, and so you're only going to pay $800 in tax. So it'll lower your tax bill. Deductions are nice. Another alternative, which is even better, is what's called a tax credit. Tax credits take money off of your total bill. So instead of reducing your total income, tax credits just say you don't have to pay a certain amount of the tax owed. So for example, if you owe $5,000 in taxes and have a $1,000 child tax credit, then what that means is you no longer owe $5,000 in taxes. You instead would only owe $4,000. So tax credits have a bigger impact, but we're happy as taxpayers to receive both tax credits or tax deductions. Once we know what our taxable income is, then we can look up how much tax we actually owed in the tax table. And they provide this to you when you have your 1040 form. And so you look up how much your income is, and in this case we had $33,000 in income. And we're a single person in this example, and so we just look for the line that tells us where our income is, and we find the amount that single people were supposed to pay, and in this case it was $3,773. And we'll put that information on our 1040 form in line 11. We don't have any of these other things. This is all more complicated taxes, in which case you probably want to hire a tax professional. So we'll just go ahead and say our tax amount is $3,773. In this example, we don't have kids or anything like that. No tax credits to be taken advantage of, and so our tax bill is $3,773. And that's our total tax. So then the question is, how much have I paid? Have I paid too much or too little? So we look and find in line 16 how much money was withheld. So we look at our W-2 again, and on that W-2 it says we had $6,000 withheld by our employer. We only owed $3,773, but we paid $6,000, which means we have overpaid. At the end of the day, we need a refund, and that refund is the difference between what we've paid and what we owed. In this case, $2,227. And so that's our refund. And we can tell the government to go ahead and put it in our checking account, and we can give them a routing number and accounting number, and that money will end up in our checkbooks and our checking account in relatively short order. But keep in mind, this refund is not free money. It's not something the government's giving you. It is your money. You overpaid, and you get it back. If you haven't paid enough, then you have to write a check to the IRS and pay your taxes. Now, one other thing about tax rates. The United States uses what's called a marginal tax rate system, which means that you're paying a different amount of tax, a different tax rate for different portions of your income. And so in a case like this, where we're earning $80,000 in taxable income, we're not paying 22% on all of our money. We're only paying 22% on a portion of our money. So that first $9,500, we only pay 10% of tax. And so I'm only paying $952.50 for the first $9,500. Then any income that falls in the next section pays 12% on that amount of income. And then anything that falls in the next portion, we'd pay 22%. And so our tax bill will be less than if we did 80,000 times 22%. That's what we call the effective tax rate. In this case, it's about 16%. This way, those who earn more will pay more in taxes. It's called a progressive tax system, and that's what we have here in the United States. Taxes can be very complicated when it comes to filling out the forms. That's why the older you get and the more wealth you acquire, the more important it is for you to hire a tax professional. But as young adults with very simple incomes, you can fill out your own tax forms pretty easily. You can also get software like TurboTax or something like that, which makes it super simple for you to complete and file your taxes. So there's no reason to be afraid of doing it, but it is important that you make sure you get it done on time. We'll work on filling out your own tax forms in class and make sure that we understand all these major concepts.